Welcome back to Small Caps, ladies and gentlemen. My name, Kerry Stevenson. And finally, I got him back onto Small Caps. Gareth Soloway, he's the Chief Market Strategist for inthemoneystocks.com, your trading friend. Now, there's lots of free information on there. There's also a subscription service, but Gareth really is a trader, but he understands the markets. And I've asked him to come back on because the last time we spoke, which was around mid-March, he did a call on Bitcoin to go 20,000 or just sub, hit that one on the mark. He talked about gold, silver, things that he likes in the market. So, Gareth, great to see you. Sorry it's been so long. I've been getting hammered by our investors saying, "Where's Gareth?" So here we are.
Well, first of all, wonderful to be back. So nice to talk to you. And I'm always, I just love chatting with you and giving all of your watchers a full rundown of everything we cover. So I'm excited to be here and great to see you.
Yeah, thanks, Gareth. Well, as I say, back in March, lots of things have changed and some things have not changed. Russia, Ukraine, still ongoing issues there. Gold, silver price, not doing a lot. And Bitcoin, hit that one absolutely on the money. So I think we'll start with crypto and then we'll go into a few other pieces because, when you get it right, you really get it right. And I think that a lot of people out there at the moment are feeling quite anxious about what's going on and what do they do to protect their wealth going forward.
Yeah, and it really is a tricky market because there's not a lot of areas that are performing well, right? So, like you mentioned, even gold and silver, silver hasn't been performing well at all. Gold's been just hanging in there. I think it's about flat on the year, but it's again been struggling. So I can understand why there's a lot of kind of angst with investors about where to go. And the gold miners have actually been crushed recently too. So there's not a lot of places to hide. And again, it brings up the importance of understanding chart levels and trying to look at them and find out where the levels will be where things bottom out. So you're right on Bitcoin. And let me show my chart here. Let's get right into the good stuff, right?
Yeah, the good stuff.
Yep. So basically you're right. We talked about, and I talked about Bitcoin heading down to 20,000. The main reason I thought it needed to get there is because that was the 2017 high. We've been seeing a lot of the .com-ish type stuff. For those of you that don't remember the .coms, it was basically crypto, but for the internet, right? The internet age was just dawning in the late 90s. Stocks were going up, from 5 cents to 20 cents to $1 to $5, just like a lot of cryptocurrencies did. And Amazon, by the way, was one of those stocks that just had an amazing move up. But just like with crypto now, the .com bubble collapsed. And a lot of .coms got wiped out. They went to zero. And a lot of them also were bought out for pennies on the dollar by the likes of the bigger players out there. So the same thing is going on here in crypto. And that's one of the calls that I've made going back to last November is that we have to see that flush out. Part of that reasoning is just simply, if you look at how many cryptocurrencies there are like 20,000. There's no way that we can have 20,000 cryptocurrencies. It probably should be 50 or maybe just 20. So you have to flush those out. We've seen Celsius kind of get to that point of being almost insolvent. We've seen other cryptocurrencies like Terra Luna basically collapse. So it's in the process. The one thing I would say is if you look at this chart, you should get a technical bounce here. Now, this is the important part here. So I am calling for a technical bounce back to probably this level here. Let me put a trend line in. So this is about 25,500. And then if that's able to be eclipsed, you have upside to about 28,000, maybe 300 to 400. However, I don't believe we are at the lows on crypto. So I think this is a trader's market in crypto. I think you get back to maybe 25, maybe 28. But please understand that my next target on the downside is 12,000 to 13,000. And I don't mean to scare anyone. This is just what the charts are telling me. It's my job to just tell you guys what the charts are saying.
Gareth, what do you say to people that say Bitcoin's dead, it's never coming back, it's just going to be heading down to zero? Because there are pundits in the market saying, I told you so, Bitcoin's not a thing, it's just it's dots on a screen and it's not worth anything. What would you say to that?
So first of all, I would say at the highs when we were at 68, 69,000, a lot of those same people were saying buy. So they're changing their tune with the switching of the winds, the changing of the winds. And I also think that just like you have people that were pumping religiously at 68, 69,000, you also have them on the other spectrum now saying, oh, it's going to zero. There's no worth here. And the honest answer is it's usually somewhere in between, right? So I do believe in cryptocurrency. I think Bitcoin is a fantastic way to get around the printing of the Fed, to get around inflation, to basically have a currency that you can transfer very quickly around the globe. So I'm a big believer in it. I think that once it bottoms out, it will have a run. Now, one thing I'd love to show you guys, let me show you guys this on the chart. I might have shown you guys this in the past, but if we look at the Bitcoin chart here, now notice this big M pattern right here, right?
Oh, yeah.
So we have this pattern here. And then what I want to show you guys is look at the Amazon chart going back. Let's go to the weekly so we can get back there, going back to the .com era. All right. So if we zoom in, and I hope I'm not making anyone sick moving the chart, but look at the same sort of pattern here on Amazon. And I really do look at Bitcoin like the Amazon of cryptocurrency, meaning that, you know, Amazon's reached $1 trillion+. It's a mega sized company. It's taking over the globe. And you have the same sort of pattern here. And so this, yes, it collapsed. It went from all the way, you know, if we look at the highs up here, let me go to the daily chart. So if we look at, let me just go back here, just bear with me here. Let me go to the monthly, in fact. And I apologize, my charts are being a little wacky. All right, so here, and let me just say this. So here you got as high as, I mean, this is post-split. So it was, remember, Amazon just split recently. So, you know, pre-split, it was about $112 and it collapsed all the way down to $6. So if you think about cryptocurrency and Bitcoin, it could mean that Bitcoin not only is headed to 12,000, but lower. But my bigger point is look at that in relation to where Amazon went, right? Wow. So now see that little M pattern back there?
Yep.
Right over here?
Yep.
And then look at where it went. So I really do believe that cryptocurrency, as it matures as an asset, will eventually start behaving much like Amazon. And that means there is massive, massive upside. You just have to weather the storm. We have to get through this kind of bubble bursting, and then the best will survive.
And you think that Bitcoin is one of those, like Amazon, that one of the best that will survive? Obviously,
I do, mainly because it's being adopted by so many bigger players as a store of safety, right? It's kind of the digital gold. And I was thinking about this because I'm a big gold fan too. You know that. I know you are as well. Is that gold is fantastic. It's something you can hold in your hand. It's been a store of value for thousands and thousands of years. Bitcoin eventually will mature into something like that. And the benefits of Bitcoin is that you can send it very quickly. If I take out a piece of gold or an ounce of gold, very hard for me to send that to my family in some other country. So there's a place for both of these. There's the one you can hold, and then there's the digital one where you can send very quickly.
Do you know what I will? And this is not, you know, I'm not paid by this company, but there's a company called Rush Gold, which is really interesting, run by, it's not ASX listed or anything like that. It's a way that you can, I think it's called rush.gold. It's a way that you can put your funny money into something which is backed by gold. It's not only backed by gold, you're buying gold and you can send it immediately. It's got a MasterCard attached to it. It's genius. So
wow.
I think
very cool.
Very, very cool, using gold as money and the technology to allow you, so it gets around that can't send or receive gold. So I reckon that's going to follow the gold price. So anyway, yeah. we go slightly aside. Can you bring that Amazon chart back up again, if you wouldn't mind? Because I noticed that more recently it's had a bit of a pullback. Now the whole market's had a pullback at the moment, Gareth. Is that a buying opportunity for those that like Amazon, or do you think it's got lower to go, or what's your view on what's happening there?
Yeah, so that's a great question, right? So I think as a short-term play, you are going to see some sort of rally here, because if you can see here, I mean, basically this thing had a nonstop run, and then it kind of basically put in a little bit of a short-term top. And if we draw a trend line across these highs, the low that we recently saw was right to that. So I think in the near term, it likely gets a bounce back. I could see 120, 125 or so on the price. But I do think we're in a new era where valuation matters. There were so many years where valuation did not matter for technology stocks, and now people want to see that value. And so the PE ratios for a lot of these companies have to come in. So my guess is, yes, a bounce here, but I wouldn't stay married to it for too long unless you're okay holding it for a really longer period in case it goes a little bit lower. Because I do think eventually it probably does head down just a little bit more.
A moment ago, you mentioned the Federal Reserve. Now, the Fed is using the QT, so quantitative tightening, looking at raising rates, trying to, I guess, rein in that inflation devil that's out there. What's your views on how that's impacting the market? And have they got any more toys to play with, or are they in a bit of trouble?
Yeah, so I think that the Fed, they're meeting later in July, I believe, towards the end of the month. They'll tighten by another 50, maybe 75 basis points. I think they're trying to kind of front load because they know the economy is going to come to a screeching halt. I think that they're trying to bring inflation down with all their might. But my guess is, yes, it will come in, but they're basically going to force the US into a recession. And that mainly could mean that you see the whole world enter into a recession as well. So that's my biggest fear here, is that the Fed has always played from behind, right? They played from behind in 2008, 2009, not starting any sort of quantitative easing till 2009. And even in COVID, they kind of were a little late there. But when they came in, they came gangbusters in. They always have a tendency to go too hard and be late. So they're trying to play catch up. And I think that this is that situation where, yes, I think interest rates need to go up, but doing it this quickly, you are sending a shock, especially when commodity prices are already hurting the market. Inflation is already hurting the consumer. Now you're basically causing the housing market here in the US to come to a screeching halt and start to decline, many, many other things. So my only concern is that they're doing it too quickly to try to get back in front of the situation, and that could ultimately cause a recession.
You said a second ago that that's a great concern to you, but how do you play the market if we do go into recession? And do you think it's recession, or do you think it potentially could be depression? And depression being longer, harder, tougher times.
Yeah, so I think that my guess is that you're not going to see price, right? So prices tend to be sticky, and this is the same for wages, for prices. I mean, gasoline comes down, we know that with oil, but notice how, again, when oil goes up $10, prices go up really quickly at the pump. When it drops 10, it goes down really slowly, right?
Yeah, funny about that.
My fear is that a lot of the prices that people are seeing in the stores will stay. Now, maybe they don't go up much, maybe only just a few percentage, 4 or 5% a year, but that's going to put a lot of people in a hard position where, unless they're making more money, they're going to be struggling. So I do worry that there's certain areas of the population that are going to feel like it's a depression. But I also think that it probably won't be a true depression for at least 5 years or so. So I think the Fed is going to play this kind of back and forth game where, as we slip into recession, they're going to start to cut rates again and start to print money again. Then inflation is going to surge again. Then they're going to have to raise rates again. And then that's going to slow the economy. And it's going to be this back and forth, kind of this, which one's the worst scenario for us? Let's attack that one. And then eventually later this decade, I do think we have a depression.
Later this decade. So that's, I guess that's coming into 100 years since the last one. So
that's basically, yes. I mean, basically, I'm looking at the 100-year cycle, noticing how again, we had COVID with the Spanish flu, about the 100-year cycle. And it does tell us that something's coming. And you can almost see the writing on the wall, right? I mean, all of these things that have been done, this financial maneuvering by all central banks, I mean, all of us know it's not going to end well. It's just, when is that timing where everything just kind of falls apart?
Yeah, and what do we do in the meantime? I mean, you're a trader, but for those that are out there that may not be trading, or maybe they should join inthemoneystocks.com and get your, I think it's called the verified investing stock trade alerts. Maybe that's what we need to do. But apart that aside, and you do well in your calls, but that aside, how do we manage in this extreme volatility, which is making people fairly fearful?
Yeah, so I think the best thing to do is just to be cautious. For me, it's a swing traders market, which you're right. Not everyone can do that. Not everyone feels comfortable doing that.
Yeah.
But I do think there are opportunities. Like I know we're going to talk about gold. Maybe we can use this to branch into gold. But I continue to be a huge fan of gold. And then when Bitcoin gets into the kind of the teens, the low teens, maybe even the single digits, I do think that is a buying opportunity where as the market starts to realize that the Fed is always going to come back with their same game plan every time we slip into recession and print more money, I do think Bitcoin has that place and could be the massive up mover, like I showed on that Amazon chart. But again, gold is such a great play right now. Most people aren't really fully, like you look at the gold chart, and I hope you don't mind that I'm kind of taking us in this direction.
Go for it.
But if you look at the gold chart, a lot of people are like, oh, gold stinks. It hasn't even moved all year. You know, we're basically hovering at the same level we were at the start of the year, which was right over here, right? So, I mean, maybe we're up 1% or 2% on gold, but this is only one small portion of the deal here. Number one, Bitcoin's down over 50% since the start of the year, maybe even more. Number two, that the equity markets, you know, the S&P is down over 20%, NASDAQ is down over 30%. So now you're in an asset where it's been holding steady. And not only that, but usually in a market where the dollar soars, gold gets smoked, but gold has been rocking here. Take a look at the DXY, the move from the beginning of the year. Here's the beginning of the year, and look at the dollar. The fact that gold is still even flat to positive when the dollar has soared is hugely bullish, right? And then the other side of the coin, and you know this too, Carrie, is that when yields start to go up, usually the dollar also, usually gold also gets pounded. And look at yields since the start of the year. We're basically up over 100% on yields, and gold has still held strong. So again, it's not flashy. It's not sexy, but gold has been rocking it this year. And what it tells me is that when the dollar finally starts to decline or when yields continue to pull back, you could see a major move up in gold.
Can we go back to that US dollar chart? I want to find out from you, Gareth, how you play that. The US dollar has been strengthening and continuing to strengthen. Obviously, there is a lot of debt out there which is held in US dollars. In terms of the US dollars as a currency, you know, here we are, I'm talking to you from Australia. The Australian dollar has weakened a little bit. The US dollar strengthening. Do you see that continuing to happen? Almost like Brent Johnson's dollar milkshake theory, where he says it will continue to strengthen. What's it telling you?
Yeah, so this chart right here and these parallel lines, at least for me until proven otherwise, is everything, right? So we can clearly see that you started, this is going back to 2015. Then you had this high in 2016. You missed it a little bit here in 2020. And now you're hitting this line. And notice the parallel line is almost perfectly touching here and then touches here and here. So what I like to do is when I look at charts, I say, okay, anything can happen. You're going to hear people saying, oh, the dollar is going to go to zero. You're going to hear people saying, oh, the dollar is going to continue to rip higher. It's the only game in town. I'm more in the middle ground where I say, well, let the chart tell me. Let the chart tell me. And what I see right here is that every time we come up here in the past, we're kind of getting a pullback, you know, here, 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 and here. And that tells me that the probabilities of a move is for a down move. So I'm actually bearish on the dollar here in the near term over the next couple months. I think the dollar could pull back.
All right, and going back to gold, you're mentioning that, you know, people think it isn't sexy, nothing's happening with it, but actually it's doing what it always should do, which is, I guess, holding its purchasing power, holding its nerve, if you like.
Yeah. And I would just point this out is if, let's say the dollar wasn't up huge this year, I think gold could be $100, $200 higher, right? I think if yields weren't soaring this year, same thing. So you have to put it in those perspectives. And then the basics of it is that, you know, gold has held your value this year if you were in it versus the S&P or Bitcoin. So I still will tell you, I mean, here's your trend line. You broke out right here. You went to double top. That's a classic double top with this high in 2020. We then had a pullback to the scene of the crime. We kind of kissed it again. But gold is still holding this golden trend line, if you will, that tells me it's still in a breakout, even though it hasn't soared yet. I would just say look for the signals. Look for the dollar to start to come in. Things like that could be the catalyst to the bigger move up in gold that should start sooner than later.
Do you think there's any other things that will create a bit of a move in gold? For example, the war with Russia and Ukraine expanding potentially to other parts of Europe and even potentially globally. Do you think that that could also be a catalyst for a flight into gold? Because my thinking, Gareth, was that with Bitcoin's massive pullback, that there was going to be a little bit of an increase in gold. Doesn't seem to have happened. But as you say, it's not all bad, ladies and gentlemen. Actually, gold's doing its thing. But what do you think might be a little bit more of a catalyst? Because it's certainly a store of value.
Yeah, I mean, I think any sort of, geopolitical, I mean, if the war, hopefully not, but if it were to spread, people would absolutely run into that. They'd also run into the dollar, though, frankly. So again, then you'd have that battle of dollar up and then gold. Can gold also move up? So it's tricky, right? I mean, you have to look at it in those terms, but I think instability and fear are reasons why people buy gold. And I think that fear factor of what's the Federal Reserve going to do? Is the economy going to go into recession? Are they going to start printing again? Or is it reset? This is why gold to me makes so much sense, is because if the Fed is printing, then you have inflation. If they're tightening, then you have recession. And the fear of a recession makes people buy gold. So it's kind of like both sides, to me, makes sense with gold. So again, it should be one of those things where it's almost like you sleep a lot better at night having some gold in your portfolio.
It's just like a little bit of an insurance policy. Now, silver.
That's what it is.
I know you like silver. You said to me in the past that you liked it and you thought if it gets to 24, that could potentially be a buying. We're below 20. I think we just hit below 20. What is going on with the poor old silver market?
Yeah, so I mean, the longer term chart I still am bullish on for sure. You have the big move up here. This is all sideways consolidation on a bigger time frame. But there's no denying that right now we've had a little bit of a short-term breakdown on silver, and your next target is around $19. So my guess is we do test 19. And a lot of people are saying, why is gold holding up, but silver's kind of coming down? And the essence of that is basically the industrial side, right? So silver has that side of it where it's used in batteries, it's used in solar panels. So if the economy is moving towards recession, then it makes sense that there could be a weakening in silver, even if some people are buying it as a store of safety. Now, longer term, and this is the big thing too, right? Is longer term, is it dead? No. And the bottom line is we're moving towards an economy where there's more alternate energy like solar, more electric cars. So I mean, shorter term, yes, recessions come and go, but I think, again, the switchover has started. And the 19 level is a huge buying opportunity. I'll be eyeing that one to buy some.
That's a nice segue into what I wanted to ask you about in terms of the equity markets, because we talked about the S&P coming down, the equity markets down 20, 30, even 50% in some sectors. But it's not across the board, is it? Potentially commodities, especially in inflationary times and this move to the electric vehicle, the green economy, could be very positive for commodities. And last time we spoke about that crazy move in nickel. Are there any particular commodities that you're looking at the moment and saying, wow, actually lithium. Yeah, let's go lithium.
Yeah, let's talk about lithium here. So this is LAC, which is a Lithium Americas Corp. But I mean, the bottom line is that in recessions, you're going to see these things pull back. Like we've seen copper have a big pullback, all of these kind of industrial silver. We just talked about silver. So you have to understand that. And the biggest signals, by the way, was the hype, right? I mean, there was so much hype around lithium and because of the Elon Musk story and Tesla and electric cars. But you always want to remember to sell into that hype. When it gets to that level where you walk into your local pizza place or sandwich shop and they're talking about it, always remember that's your signal. You should get nervous if you're long these type of things. And then the bottom line is let it come down. It may still have a big macro move to the upside down the line, but they just have to correct. It has to flush out what we call the weak hands. So like on LAC here, I would start getting really interested right around this $16, $17 level here. Lots of support in here. You get back to this 2021 area. And in fact, there's also a trend line I'm seeing right here where this is actually why we're holding this level. Now, I don't think this level holds for too much longer, but look at that beautiful trend line right there with price just above it. So you're still actually holding support here. But I would say that, with the economy maybe inching towards recession, it wouldn't shock me to see a little bit more downside.
But lithium, there's still opportunity, but there's a lot of companies in the lithium space. And I guess to investors out there, how do they cut through the noise? I guess it's look at the management, do your research, find out what it is that they've got. It's the age-old thing of don't listen to the pizza shop owner. Nothing against you pizza shop owners. We love pizza. But it is doing your own research is really important, isn't it, Gareth?
It is. And remember that like the pizza shop or the sandwich shop, they don't have the time to sit behind their computer. They're running a business, right? So what they're doing is they're getting secondhand, third hand, fourth hand, fifth hand information. And by that point, the big money's already in these trades. And usually by the time kind of that retail crowd is buying, the big money is selling into it, right? And you always have to remember that chain of events, how buyers come into something. So buyers, usually the retail crowd, always in at the end when the hype is biggest, when smart money is starting to unload. So I think that for the most part, you want to focus on well-known companies, right? I think especially in bear markets, you have to be careful with small companies because you don't know if they have enough cash, if they're not profitable, to sustain themselves in a downturn, if it's hard to raise capital. And I think that's the biggest thing is in bear markets, companies have a hard time raising funds. And so you have to just look at their balance sheet. Do they have enough cash to withstand 2 years of troubled markets? If they do, then maybe that's something you can look at.
All right. So in terms of inthemoneystocks.com, I really want to find out, a lot of our community are based here in Australia. Is it worth them coming and joining inthemoneystocks.com? I mean, how can they benefit from it? If mainly you're doing US trades, all that sort of stuff. I'm just curious as to, because you do the hard work, but is it mainly US stocks that you look at, and how would an Australian benefit from that? How would they? How would they play?
Yeah, you're right. The service that I have is called Verified Investing Alerts. And basically in it, I put out my trade signals. So most of them are US based stocks, but they're all big caps like Apple, Microsoft. They're ETFs that track the S&P or oil so there's a lot of probably overlap with people what people can trade in Australia. In addition, I do a video every single day, Monday through Friday when the markets are open. And in that, I analyze charts on the S&P, on oil, on gold, on silver, sometimes on natural gas. So there's definitely some overlap where you can see how the charts, and I'll guide you on these charts. And I think that's really the value for a lot of people in different markets is the hardcore technical analysis, the levels, the pivots, when I expect a move to come in, and then they can trade it accordingly based on their vehicles.
How difficult is it to get your head around it for a novice out there, probably like myself, because I just buy stocks of companies that I like. I'm not a trader. I've loved chatting to you because I'm starting to understand charts so much more. But for somebody that, how difficult is it to understand when you're doing those daily updates, and how long do they go for?
So I don't think it's too hard, just because everything is very defined. So you'll hear me say, natural gas at X price, this price is great, or oil, I'm going to go short oil here because of this trend line. So it really gives you kind of insight into exactly what I'm thinking. And then it's just a matter of you doing that trade, pulling the trigger on the trade yourself. But I also think the beauty of it is in these videos, which are 20 minutes in general a day, there's a lot of technical analysis, and people actually tell me that that's the most value, because what they're learning on a daily basis is just so enormous in terms of understanding psychology of markets, the psychology of investors, the discipline needed to be a trader and investor, all of these other things that kind of come through. Very, very cool and very helpful.
Well, Gareth, I'm so glad. And, by the way, ladies and gentlemen, it wasn't Gareth, it was me. I got a little bit distracted. But Gareth, we'll get you back on next month and see what these crazy markets are doing. But for now, thanks for giving us that overview. As you said earlier, you like the gold. Silver might be a little bit lower, but long-term good. And Bitcoin, ladies and gentlemen, he's talking around about the 12,000 before, but he says it's going to be around for a while to come. So Gareth Soloway, thanks for joining me on smallcaps.com.
Thank you so much. Take care.